Welcome to the Traders Market Intelligence Report brought to you by WealthBuildersHQ.com. This update is for Monday, November 17th, 2025. Hope you're having a fantastic day. Hope it's been a great trading day for you. As we get started, keep in mind, everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like here today, make sure it fits your own personal risk profile and risk tolerance. All right, so let's start off with the economic reports. Government's back. We're not in full swing yet, of course, but we're getting pretty darn close. So let's go check it out. So what do we have here? So Monday, we've got an 8:30 a.m. report. I don't really care. It's a 3 as far as I'm concerned. We do have a 335 report. That's a 1, right? It's FOMC. It's Waller, which we don't usually get a lot of craziness from Waller. But with as shaky as things are right now, we're getting a quarter, a half, or even potentially no drop, no cut. I think it's important to listen to what they've got to say. 2 o'clock on Wednesday, FOMC minutes. Oh, yeah, that's big, right? So that'll get a 1. 8:30 a.m., we've got a couple of reds. So all of these that are 8:30s, every one of these, they're all 8:30. These are all 8:30. We got red and orange. As far as I'm concerned, they are all a 2. Why? They're before the market, but they are red, so they are important, right? So you're going to see a movement from it. Now, again, if you're trading futures, everything red is a 1. It doesn't make a difference what time of day it is. Tentative on unemployment claims, existing home sales is a 2. I don't know what to give the unemployment claims because I don't have a time for it yet. 9:45 a.m. Manufacturing PMI, flash manufacturing, and services, they're both 1, same report, just stripped out differently. 10 a.m. we've got a 2. It's orange. Treasury currency, I don't know, it's tentative, so I'm really not sure. So you can get an understanding of what's really important and what's really not important. 8:30 orange, not really important. 8:30 red, yeah, important, but maybe. 1s, keep your eye out for the 1s, all right? Let's look at the market. So the S&P 500, what a gap down. Bang! Right down near the 55 EMA, stretched down a little bit, got close to the higher swing low and moved up. Now, here's our biggest problem. With the last 2 days, we now have a lower swing high. Right there. So we're looking at our tops coming down and our bottoms coming up. So we've got a wedge formation happening in there. Actually, I'm going to draw it. I'm not going to do anything, but I'm going to draw it with a trend line. I'm going to draw right to that last date. I'm going to draw it with the trend line here, so I know where I left it. And you can see where this wedge forms out. So let's see. For this wedge to have value to it, we're going to pick up where we started. This is on the, what do we have here? 10th. All right, so let's just go here. You know what? Let's do it this way. No, we'll do it from right here. So the 10th, right here. We're going to draw this out. We're going to take this and we're going to pin it right to where the 2 lines cross, intersect each other. All right, so with wedge formations, using Fibonacci to determine where the breakout has to come in. And this is what we're looking for. Between these 2 lines, right, which is 30 and 37 days out. So this gives me November 21 and December 2nd. Somewhere between there, to get a good wedge going in here. I've got my line in there. Sorry, let's do that again. To get a good wedge going in here, we want to see this roll up and down in here. And in between these 2 lines, it's either going to break out to the downside or break out to the upside. Either way, it doesn't make a difference. We're just looking for the break from that wedge in there. If it happens in here, then we follow all the wedge rules. If it happens anywhere outside of there, before it, after it, I don't care. The wedge is not valid any longer at that point. Okay? So if I threw a lot at you and you're kind of like, whoa, wait a second, hold on a minute, what the hell? Go over to tradinglikeaboss.com. There is a free training on there on the basis of Fibonacci's. It's a 3-part training series. You can go ahead and click on it. You'll get 1 part each day for the next 3 days. It'll give you some time to do some homework. And it'll give you some basis of how fibs work and what they are. But this indicator right here I spent a lot of time on this in our Fibonacci training series that we do called Fibonacci Mastery, Fibonacci Trading Mastery. But that's what we're looking at for the S&P 500. So where does it go from here? I don't know. But we're right now in this wedge with a higher low. If we can get a bounce from here, we're going to stick in that wedge. We've got to watch what happens as far as the break goes. All right? When it comes to the VIX, fear, we're back up again in fear. Oh, we're high. Yeah, we're in moderate. We're in the lower end of moderate. We're okay. There's nothing in here that scares me. It's actually where I prefer, I like. If I had to pick a number, give me one number of what I'd like VIX to be, just stay at 21. But Rob, as a buyer, it's expensive. You're right. As a buyer, it's more money. As a seller, I'm getting decent premium. As a buyer and a seller, I do both. It gives me the best of both worlds. Rob, is 22 bad? No, it's not that it's bad. It's just it's where I like it is about 21. When it's at 14, man, I'm buying. I'm buying because my premiums are cheap. When it's at 21, 20, 21, 22, 25, I'm selling. Right? Because you get more premium. And that green zone is great for all traders. And the yellow zone is great for buyers. And the red zone is great for nobody. Big spreads, high vols, wacky moves on the market. You can get a small move in a stock. Stock has been running up and it drops down 50 cents and you could see your $14 option go down to 7 or 9 from that 50-cent drop because of the way they suck out the implied volatility and the premium out of that option and open the spread up on the bid ask. It's a little concerning there. So S&P 500, what levels are we looking at? To the downside, we're looking at the 618, which is 66.95. On the upside, we're looking at the 67.65, and then the 67.81 is the next one from there. So with that, everybody, have a great rest of your day, and I will see you all at our next update, folks. Have a great weekend. Hope it was a good trading week, and I'll see you soon. Bye for now.